Okay. Good morning, everyone, and welcome to our workshop. This morning, we're going to be talking to Ms. Naomi Granger about navigating 280E. This workshop is specifically for businesses that are interested in the cannabis space. And at the Chicago Urban League, of course, our position is financial empowerment for Black businesses. And with the cannabis industry being a nascent industry, we want to make sure that our businesses are equipped with what they need to not only enter the market, but be successful and sustainable. And so we wanted to make sure that we're bringing you the types of information and educational experiences that can assure that we're able to do that. And the way we do that is that we have fantastic partnerships like the one we have with JT Stinnett and Anton, which is our EJC, our Equity and Justice Compact. That JT will tell you more about, but it is just another tool that we have to make sure that our businesses, and no matter what industry they're in, get professional expert information about how to make sure that their businesses are run and run well. So with that being said, I'm going to throw this to JT to let her introduce who she is, where she's from, and to introduce our speaker for the day. So everybody, I hope you enjoy this day.
Kelly, thank you so much for that fantastic introduction, for being so supportive in your role over at the Chicago Urban League. Ours, Organic Urban Revitalization Solutions, is a company that I co-founded with some wonderful folks. L. Anton Seals is the founder of ours. And we are a licensed infuser here in Illinois, as well as a transportation cannabis company. We're very excited about the partnership we forged with the Chicago Urban League back in 2020. After applying for the licenses in 2019 that we didn't get until 2021. So perseverance is a little bit at the underpin of that story. But we approached the Chicago Urban League to pitch the Equity and Justice in Action Compact, which was to do exactly what we're doing here today. It was to provide resources for newly awarded licensees that we forecast were going to be coming aboard here in Illinois, and who would need a toolkit, if you will, of resources, not only to just get their licenses, that's just getting to the starting line, right, Naomi? I mean, getting the license is just getting to the starting line. What we want people to do is to thrive in cannabis, to set up a business that is revenue generating and profitable and successful. And in order to do that, you need a toolkit. So EJC was formed. One of the things EJC does is these sessions to provide resources through partners that we feel are an asset to the community. And Naomi Granger fits that profile. We are so honored to have you here, Naomi, and I want you to get all into how you started and the company that you founded that works in the cannabis industry. But just a little bit about you, and then I'll turn it over for your presentation. I want all in attendance, and we're recording this for our community to access later on, those that may not have been able to attend, to meet Naomi Granger, the only CPA to have been featured in the Wall Street Journal. Kudos to you for that, for her unique approach to helping accounting professionals expand their practice to support the legal cannabis industry. She's provided her support, consulting, and business development skills to over 600, that's a large number, accounting professionals across the United States. Naomi entered the cannabis industry in 2017 and went from startup to exceeding $3 million in revenue in just over 2 years. Definitely something that we should be clapping and giving you a lot of support and congratulations for. Naomi is an expert in navigating 280E and the highly regulated cannabis industry. And for that, We're very honored to have her here with us today and to have her do this presentation. So Naomi, I'm going to just turn it over to you and let you take the helm and share with us. Definitely tell us about NCAP Pros that you formed and your presentation. Thanks again for being here.
Thank you so much for having me. I'm so happy to be here. I love speaking to people. I talk about cannabis all day long. I talk about cannabis accounting all day long, and I love it when people get excited to hear about what I love talking about. So thank you for having me. I'm going to go ahead and share my screen and get into the presentation. So as you can see from my screen, and please let me know if you're not able to see my screen, but this talk is going to be beyond 280E, the real reason you could lose your cannabis license and how to protect your license. Because I know JT brought me on here and she says, hey, my people need to know about 280E. We need to talk about 280E. And what I've found over the last 5 years that I've been in the cannabis industry is that the accounting discussion starts and stops at 280E. But 280E is not the beginning and the end of the story. There's so much more that you need to understand as a cannabis operator that, and we'll get into this and you'll be clear that there's something 280E, it's important. Maybe 3 years, 4 years down the road after you're operating, you may get audited by the IRS. So you probably will get audited by the IRS. But there's other things that are going to happen on a monthly and quarterly basis as you're running your operation. All right. So just a little bit about me. I know JT did a great introduction. Thank you so much. I've been a CPA for 18 years now. I know I'm just, barely 21. So and as a shocker to all of you guys, I've been in the cannabis industry for 5 years now. I created a training program called Calculating Cannabis, which is an 8-week intensive program. And I teach accounting professionals who really want to get into the cannabis niche. I teach them from A to Z how to, find clients, how to onboard clients, and how to properly service these clients, how to understand the nuances of the industry, of the state-specific regulations, and make sure that their client is protecting their license. I've trained over 700 accountants at this point, and I've been featured in the Wall Street Journal, Forbes, Cheddar TV, and various other publications. And I was just recently in August named Women to Watch in Marijuana Venture, as well as Women to Watch in 2020 MJ Biz Daily. And so one of my famous quotes, any accountants on the line or any business owner on the line would agree, when your numbers are right, your conversations are different. And so these are your conversations with investors. These are your conversations with the IRS. These are your conversations with the state regulators. These are your conversations with employees, with bankers, with everybody. When you understand your business inside and out and you know the numbers of your business, those conversations are totally different because you come from an educated place. You know exactly what you need out of this transaction. And so that's my goal. I founded the National Association of Cannabis Accounting and Tax Professionals back in 2021, January 2021, because after being in cannabis for over 3 years at that point, I realized it's just a wild, wild west. There were so many accountants out there that there wasn't anything that was streamlined. There weren't any systems. People didn't know where to go. As an accountant, business owners come to us and say, hey, where do I get banking? Where do I get payroll? Where can I get insurance? And as accountants, we don't know this industry enough. There's certain people who will provide payroll services to cannabis operators and certain people who won't. There are certain companies that will work with cannabis operators and certain people who won't. So I knew that there needed to be a place where we brought all these people together so that accountants can better serve business owners. And so that's what I've done with the association. We have experts come in every 2 weeks, and they come in and then they do expert training. They help us understand how they help the cannabis industry and how we can help them support our clients. All right. So we're going to get straight into it, and we're going to talk about what makes cannabis accounting and tax different. So a lot of people come to me and they're like, hey, why do I need a specialized accountant? Or a lot of accountants come to me and say, why do I need specialized training? Like, can't I just do this like a regular, if it's a dispensary, can't I just do this like a regular retailer? Or if it's a cultivator, can't I just do this just like a regular farm? what makes a cannabis accounting and tax different is that cannabis is state legal and federally illegal. It is the only industry in the country that in our generation, this is the only time that we've ever had a $30 billion industry that is federally illegal. And so there's a lot of things that come with that, with it being federally legal. There's a lot of nuances that you have to understand, that you can't just operate like a normal business. And so we'll get into the first thing. So cannabis is federally illegal, and everybody knows IRC code section 280E. And it's one sentence. The entire sentence is on this screen, so you can see it. And it just basically says no deduction or credit shall be allowed for carrying out any trade or business consisting of trafficking in controlled substances within the meaning of Schedule 1 or Schedule 2. And so it's just this black and white. It's just saying, hey, you can't take any of your deductions or your credits, which means you can't take any of your operating expenses on your federal income tax return. And that's something that this code was implemented back in the 80s because there was a tax court case where this drug person who they were selling marijuana along with other things, they wrote off their scales, they wrote off their travel, they wrote off all these things. And then finally the federal government was like, hey, they can't take the benefits that we provide to regular business owners when they are operating in a legal business. We need to do something about that. So they implemented 280E. It's a punitive tax, and it's saying, hey, if you're running an illegal business, your cost, you have to pay us taxes on top line gross receipts. And top line gross receipts is made up of sales minus your cost of goods sold. So ultimately, the only deduction you really get when you're doing a plant touching cannabis business, and that's something that I also have to help people understand, because as an accountant, if all my money comes from cannabis operators, I technically am subject to 280E, but based on the rules and based on what I've seen in the last 5 years, there's so many businesses that have to support a cannabis industry, and it's impossible to manage the electrician and the attorney and the accountant and all these people and trying to hold them subject to 280E. So when we look at it, we say, if you are touching the plant, then you're subject to 280E. If you're delivery, you're subject to 280E. There's some nuances there because, there's things going on with taking ownership of the plant. So there's just a lot of little things that you need to understand. That's why it's good to have a cannabis trained accountant. But on the surface, it says no operating expenses, no rent, no payroll, no utilities, no marketing, just your cost of goods sold. What does it cost to grow that plant? As a dispensary, how much did it cost to even get the plant into your facility? And that's it. That's all you get to write off. No bud tender expenses, none of that. All right. But that's the federal tax code. We file a federal income tax once a year, and the IRS may come back and audit you 2 to 3 years down the road. Typically, the audits are delayed. You don't file your taxes on April 15th or October 15th or September 15th. And then that next month or even that next quarter, you're hearing back from the IRS and they're saying, hey, you got an audit. It's usually 2 or 3 years down the road. So it's important to understand 280E, but that's not something that you're going to be confronted with immediately. Now, being that the cannabis is state legal, this is something that's more important to understand. And being that it's state legal, that means that the cannabis is state regulated and the state has the autonomy to grant and revoke marijuana licenses, period. The federal government does not have any authority over that. I mean, unless you have some type of federal tax court case, then of course they're going to petition the state to take your license away. But the state regulators are the ones who are on top of granting and revoking marijuana licenses. So if you want to remain in business, your accountant must understand what it takes to be in compliance with state rules, because the state regulators are looking at these businesses more frequently than the federal government. The state regulators are looking at this on quarterly at minimum, sometimes monthly. So what does it mean to be state legal? So the first thing that you need to understand is 280E conformity. So we talked about 280E on the federal level. That is a federal tax code. And when it was issued back in 1980, it was all states say, oh yeah, we're going to conform with that tax code as well, because the purpose of it back in 1980 was, this is illegal. So of course, we're not going to let you take operating expenses at the state level either, if you're operating an illegal business in your state. But as we know, in 2012, when cannabis started going adult use, in Colorado and Washington were the first two states, and then more states came on board, and now we're sitting in 2022, and we have 21 states in the United States that have adult use legal cannabis sales. They're looking back at this and they're saying, hey, we should not conform to 280E. If you are running a legal business in our state, you should be permitted to take your operating expenses at the state income tax level. So it's important that your accountant understands 280E conformity, and when they're filing your state income tax return, that they're properly taking the deductions, because if they don't understand conformity and they're not taking operating expenses and they're following federal, you're paying a lot more in taxes than you're legally obligated to pay, which you're already paying a lot more in taxes than a normal business. So you don't want to pay even more. So that's the first thing that you need to understand. It's state legal, but you need to understand if your state conforms to 280E or not. The next thing that we need to understand is, because it's state legal and federally illegal, we have limited banking and no interstate commerce. And so interstate commerce, both with money, you cannot produce a plant in Colorado, in California, and sell that plant to the end user in Nevada. There's no interstate commerce, and there's no interstate transport. You can't even move that product from California to Nevada, even though both of those states have state adult use legal programs. You cannot cross any federal means to transport that product. So that means you can't use the federal mail system to transport that product. You can't use the federal highway system to transport that product, and you cannot use the federal airways to transport that product. So if you're moving that product from California to Nevada, that is a federal offense. That's a federal crime. And so with the limited banking, and the reason why we can't go to Bank of America, we can't go to Chase, we can't go to any of these major banks, is because their whole infrastructure is set up on interstate commerce. You can open a Chase bank account in Washington state and swipe your card in Florida, or you can even swipe it in Europe. Like, it is it's an international bank. And that's the same thing with credit rails. That's why you can't use Visa or MasterCard or American Express or Discover or any credit cards in cannabis operations, because credit is international. And so with limited banking, these companies are limited to getting state-funded, state-chartered credit unions. And so state-chartered credit unions have what you call a closed-loop system. So that money goes into that bank and it stays within that state. And so there's no interstate commerce there. So those are the options for cannabis banking. Now, when you think about it, and the reason why I put the term limited banking is it's really difficult to run a $3 million, $5 million, $10 million business with a state-run credit union, because a lot of these credit unions, they don't have the same type of infrastructure that a Chase would have. They don't have the same type of technology. A lot of the transactions have to be manually reviewed, manually entered, and every single month, at least 2 to 3 times a month, I'm on the phone with my client's bank because they've done something incorrectly. We send a $10,000 deposit and we see $1,000 hit our account. We sent a wire transfer, and then that wire transfer never cleared, or it went somewhere else. There's so many errors that are happening because these banks aren't equipped to operate such big businesses. And so it takes a lot more for your accountant to be on the phone and making sure all that stuff is happening. So that's just one aspect. That's just banking. There's so many other things that your accountant needs to be aware of and be on top of. So that's why it's a lot more work to do accounting for cannabis businesses. Another thing that comes with it being state legal is you have state cannabis specific taxes, including cultivation tax, which is unique to the marijuana industry, as well as marijuana retail tax, which is unique to the marijuana industry, along with other excise tax. Now, a lot of different industries may have excise tax, but cannabis, they have their own special excise tax. And that's something that your accountant needs to understand. And we're going to dig into this. We're going to do an example. We're going to go into the tax how cannabis is taxed at the state level in the next slide, and specifically dive into Illinois so that you can understand how complicated this gets. Another thing that you need to understand is seed to sale inventory tracking limitations. So each state has a state mandated seed to sale track and trace system. And the purpose of these systems is to track the plant from when it's planted into the ground, it's grown up, transferred to the retailer, and then sold to the end user. And it's twofold. Of course, we're dealing with medicine. So if there's any event that a recall or anything has to happen, we need to have this track and trace in place so that we can track down that medication and prevent further harm to anybody who's purchased that product. But of course, the second purpose for that is to track sales. Like when we get into the sales taxes, you'll realize is they want to make sure that you're not just growing some, you're reporting sales for some, but then you have a back room where you're growing a bunch others and you're not reporting any sales tax to, and you're not, recording any income for. So these state seed to sale track and trace systems are state specific. So there's three, there's Metric, there's BioTrack, and there's Leaf data systems. And then Washington State has their own proprietary system. But even though Metric is the state seed to sale track and trace system for both California and Nevada, those systems don't talk to each other. So there's no integration. You cannot transfer product from California Metric into Nevada Metric. So that also eliminates any interstate commerce. But then that's also a whole nother piece of the infrastructure that would need to be unwound if this were to go legal. If it's not a flip of the switch, if it goes federally legal or if it's descheduled or whatever, there's so much infrastructure that's being built to make this state legal and federally illegal that states would have to start passing laws and rules and export and import laws and all those different types of things for it to even work out. So my prediction is federal legalization is 10 years down the road, and then unwinding this system is another 10 years down the road. So we're going to be dealing with this complexity for quite some time in this industry. Okay, so let's get into the marijuana tax. And let's see, cannabis is taxed in 3 different ways, and many states levy more than one of these taxes on their operators. So we have the percentage of price, which the percentage of price looks like any regular sales tax that we're used to seeing. You go into a store, you buy a product, you pay sales tax on top of that. That retailer is responsible for collecting that sales tax from the consumer and then remitting that sales tax directly to the state. So that's the first way that cannabis is taxed. The second way that cannabis tax is based on weight. So the percentage of price is typically at the retailer level, either delivery, whoever the retail shop is, whoever's getting that product to the end user, that's where you pay the percentage of price. The weight-based tax is at the cultivation level. So the cultivation tax could be based on weight. It could also be based on THC, which is the potency tax. So there's the weight-based tax. Rates differ based on the product category. So, the tax is different for flower than it is for stems and leaves and clones. So the taxes vary. And then when you have the THC tax, the THC or potency tax, which the state of Illinois has in place, which we'll see in the next slide, is based on the percentage of THC in that product. And the percentage of the THC tax also varies based on the marijuana product type. So edibles may have a different percentage or THC-based potency tax. Concentrates may have a different tax, and flowers may have a different tax rate. And we will also get into that because the state of New York is bananas. They're all over the place with those different rates. So it's important that we understand all the different taxes, how your company is taxed, at what rate for each different sale, when these taxes are due, how to file the taxes with the state, and how to even remit the taxes to the state. Because it's not just that you don't just log into the site and push a button. State of Illinois, you can, but some states you have to physically pay in cash or a physical check. So let's get into that. All right, so Illinois marijuana tax. So as you can see, the wholesaler, the cultivator who's growing the product and who's wholesaling it to the distributor or the retailer, their tax is 7%. And then when you get into the retailer has two taxes. You'll see the potency tax at the top, and then we have the percentage of price tax, bullet number 3. So the potency tax, based on type of product in the state of Illinois, it's 10% tax for products less than 35% THC. And then it jumps to 25% tax with products with a concentration higher than 35%. So as you can see, like that's more than double. And the goal of this tax is to, prevent people from wanting to sell the higher THC. I mean, they want to control what's being sold, and they want to control the potency that's out there. And that's how the regulators actually explained it to me. So you're getting taxed more than double if you want THC greater than 35%. And then when you get down to the sales tax, the retailer pays 6.25% state sales tax and 3.5% local sales tax. And so where the complexity comes with this is, first of all, you have this potency tax you have to calculate, which is an excise tax, and then you have your sales tax at the state level and the local level. And depending on your state, some of these states they call them cumulative taxes, meaning you first have to charge one tax, figure out what that total is, then charge the next tax, figure out what that total is, and then charge the final tax on top of all those once you've totaled the taxes together. So you're accumulating. But what we found is a lot of these POS systems in the cannabis industry, they don't have the capability to properly calculate this. That's not something that they're focused on right now. They're focused on regulations. They're focused on making sure that they're in compliance with the state regulations, and they're not worried. Accounting and tax and all that stuff is second and third in the line of priority as they're rolling out these POS systems. So you need to understand, if you have a cumulative tax, your POS system is not collecting the proper amount of tax from your end user when you sell that product, you are on the hook for the remainder of that, because you still owe that, even though your POS, even though you have not collected it. So that's something that your accountant, or if you're an accountant, would need to be on top of and understand, hey, if this POS system is doing it incorrectly, we need to do something either at the register, or we need to just understand what our liability is, and know if it's just maybe a couple $100, then we can bite the bullet. But then if it gets into the thousands and tens of thousands of dollars, something needs to be fixed. Okay. And then the filing requirements for the state of Illinois. So the payment and the filing, the returns and the payments are due on or before the 20th day of the month following the end of the reporting period. And so it depends if the reporting period is monthly or quarterly, and that depends on how big of an operation you are. If you're collecting less than a certain number of dollars of sales tax, it might be quarterly, but once you exceed a certain number of dollars, then it becomes monthly. And that's a state by state basis. So this is specific to Illinois, but some states require a payment monthly and a filing quarterly. It's all over the place. But you need to understand that this is something that's due monthly or quarterly on a regular basis. And if you don't file this return and make this payment, then you're not in compliance, and you're at risk for losing your license. You're at risk for losing your hard-earned investment in this business. So it's important that you understand that, and that your accountant understands that, and it's remitted timely. It's also important to understand, so for the state of Illinois, you can pay it electronically, which takes a lot of the burden off. You can just push a button and make that payment. But we'll get into another state. Let's look at New York. So New York marijuana tax is a little bit different. In New York, we're coming on board with legal sales in 2020. So they're going to be hit with this. The accountants in that state, I pray for you. Let's get into it. So the distributor has a potency tax. And I'm gonna start saying this, but it's just gonna stay with me. I hope I don't lose you. Edibles are taxed at 3 cents per milligram of total THC. Concentrates are taxed at 0.008 per milligram of total THC. Flower is taxed at 0.005 per milligram of THC. Just these 3 categories alone has my head spinning, because typically you have a store and you just have a variety of things, and it's so complicated to say, oh, was that an edible sale or was that a flower sale? Wait, let me make sure I charge the 3 cents. Oh, wait, no, I should charge the 0.008 cents. all over the place. So I'm hoping that the POS systems in the state of New York, when they roll out, that they've taken this into consideration and they've programmed these properly to make it a little bit easier for the business owner and the accountant. Now, on top of this potency tax for the distributor, we have a retailer tax, which is a state excise tax of 9% of the sales price, and a local excise tax of 4% of the sales tax. And then the state of New York, they are due monthly by the 20th day of the month following the month of the cannabis sale. So if you make a sale in the month of December, this needs to be filed and paid by the 20th of January, or else you are not in compliance and the state regulators will be looking at your operation. And then the New York State requires that this is paid by check. So they don't let you pay this online. And the fact that it's paid by check means you either have to physically deliver the payment to the state taxing authority, which either, if I don't know if your accountant is local, or if you have a store manager or somebody has to physically drive this check into the office, or you can deliver it by snail mail, but you need to make sure that it's filed and figured out and put in the mail and it's going to get there in time. You've got some type of way to certify that it's been delivered and things like that, so that you can make sure that this is being taken care of. But there's no other option. You can't just use bill pay, which would be the next option. You know, bill pay will send a check for you. You can't do that, because when you're paying your state sales tax, they need to know where to apply this tax. And you can't just put in the memo, you know, your business name. They need to know your business name. They need to know which quarter or which period this tax should be applied to. They need to know whatever your state your state business number. They need to have that number in there. They need to have there's a lot of information that they need to have to properly process your payment and apply it to the proper account. So it has to be either physically mailed or physically delivered to the location, which makes it a lot more difficult. And in some states, if you're not banked, then you may need to either, if they accept cash, you can pay in cash, or you need to take another step and go get a cashier's check and then, or a money order, and then go make that payment. Some states only accept cash. So then you have your store manager running around with $10,000 of cash in their bag, in their own personal vehicle, delivering this to the taxing authority. So then now we have a public safety issue at this point. So there's a couple of things that needs to be considered when you're looking at it being state legal and looking at some of the requirements for each of these states. I'm going to jump into New Mexico, but this is just going to be brief because I just want to show you why it's important to have an accountant that understands this industry. So if you were to go to the New Mexico statute and read, it says currently it conforms to 280E, meaning on the state income tax, you can't take any of your operating expense deductions. So if you have an accountant who's just a generalist accountant and they're doing the chiropractor and the restaurant, and then they've got your one, you're the only cannabis company, but then they have like 10 other industries that they're working on, they may just read it and say, hey, we can't take any deductions, and then move on. And now, you know, you're stuck. However, if you have an accountant who understands this industry and understands that things are constantly changing, there is a court case. The decision was just dated this year, March 30th, where a cannabis operator challenged the state and said, hey, this program just went legal this year. I'm running a state legal program. I should not be subject to 280E at the state level. The state agreed, and they found this in favor of that operator, and that operator was able to take those deductions. And so if your accountant is not aware of these changes in something like this that takes precedence over what they're seeing in the actual code, because the code just hasn't been updated yet, they may miss this, and they're going to cost your business tens of thousands or hundreds of thousands of dollars in taxes that they were not required to pay. Another thing, California cultivation tax. Beginning July 1st of 2022, the cultivation tax no longer applies in the state of California, which is huge. That's a huge win for cultivators in the state of California, because they were really, really struggling. So any savvy business owner would want to push all of their sales after July 1st. Like, yeah, nothing happened before July 1st. Everything, like, let's just not have any sales on July 1st. However, state regulators are hip to this. And so they have an army of regulators who are auditing these businesses and making sure that they have proper cutoff. So your accountant needs to understand cutoff and they need to understand how to properly show that this sale, and here's support that this sale actually happened prior to July 1st, and these sales happened subsequent to July 1st, and be able to present this to the state regulators when they come, so that your business is not subject to more taxes than legally required. So that's another thing. You need to have your accountant that understands all these little nuances. I hope I've convinced you. I hope I've convinced you that this is really important, and the state level is way more important than 280E. All right, let's just look real quickly at the state tax forms. This is the Massachusetts tax form. A lot of the states look pretty similar to Massachusetts, but we're going to also look at Oregon, which is completely a whole nother game. I'm thinking New York might look like this as well. But all you have to do is populate the gross sales, marijuana sales. So that's another thing. If you're selling paraphernalia, CBD, any other items in your store besides marijuana, your accountant needs to make sure that the POS system or their reporting or whatever they have in place is pulling out just the marijuana sales, or else you will be paying marijuana taxes on all of your sales. So it's important that your accountant knows that. And the only thing they need to populate is the gross sales. And then this form auto-populates. So it calculates the excise tax due, it calculates the state sales tax, it calculates the local tax, and it does its own calculation, and it gives you a total. And that's the amount that you have to pay to the state, no matter what your POS system collected. What this says is the truth, and that's the amount that you have to pay to the state. Oregon is totally different. When you look at the Oregon form, they require that you pay monthly and file quarterly. And the way that it's organized is this is the schedule. And so within the schedule, you'll see across the top, you have to organize it by product type: usable marijuana, immature plants, cannabinoid edibles, cannabinoid concentrates, extracts. You have to pull your POS system reports, do these fancy pivot tables just to figure these out, because typically the POS systems aren't organized in this manner. So not only do you have to pull these out and figure out, okay, how much was in usable marijuana, how much was in edibles, then you have to organize that by month and put the total amount for each month of that quarter, January, February, and March. And then you have to put the total amount sold in grams, the total amount, the total of those sales. And then on the previous tab, process is so complicated that I ended up creating an entire software that I provide to my accountants within my training when I train my accountants, so they can just plug in the numbers from the POS system and be able to calculate this themselves using that software, because this just kind of gets out of hand. So that's that. And then we'll just talk quickly about the marijuana license renewal. So it's important that you understand what is required for you to renew your license. There are significant fees. I saw in New York, it looked like the cultivator, the renewal was upwards of $200,000. Budgeted for this for you as an operator, because if not, and you come to renewal and you've got to pay $500,000 at, $200,000 at the state level, another $100,000 at the local level, and then maybe this other tax that at the municipality, and you don't have those funds, now you're not able to renew because you cannot pay your license renewal fees. So you're already behind the ball at that point if your accountant isn't properly budgeting for that. And then they also have to understand the compliance requirements when it comes to renewing your license. And so the state of Massachusetts require that you have a certificate of good standing from the Secretary of State, a certificate of good standing from the Department of Revenue, and a certificate of good standing from the Unemployment Department. And so if you're not up to date with your marijuana retail tax with the Department of Revenue, you're not going to be in good standing with them. So you will not be able to renew. If you haven't properly registered and filed and paid your unemployment tax, and you don't have a proper payroll people in place and they are not doing it right, you're not going to have a certificate of good standing from the Unemployment Department, and you're not going to be able to renew your license. Your accountant needs to understand all these pieces and be able to have this in place for you so that there are no surprises when it's time to renew your license. All right. And the final portion of my presentation is I just want to get into some of the cash and inventory controls. When you hire an accountant, these are the first two things, if you don't already have it under lock, that your accountant should be making sure is under lock, because cash and inventory are most valuable items in cannabis. And inventory, a lab tested cannabis product is more valuable on the black market than any other black market product. And so keep that in mind. It's important that you have strong inventory controls. All right, so here's some of the inventory controls that we work with that you should be looking at. First of all, inventory strategy. In order to be profitable, you have to have a strategy in place. You have to have KPIs in place. You have to know what is your average ticket price when your customers come in. How many units per transaction are people buying? If the average ticket price is like $20 and they're only buying 1 unit, maybe you're not stocking the products that your people want. Or maybe your bud tenders need training and to understand how to upsell them at the register. So that those are some of the things you need to look at the onset. Inventory intake. Inventory strategy is an operational thing. That's something that your accountant would not have visibility or control over. Maybe your POS system will give you your average ticket price or your units per transaction, but that's something that's more operational. Inventory intake, though, those controls are something that your accountant should be putting in place. There should be a 3-way match. We mentioned that there's a seed to sale track and trace system that does not talk to your POS system. However, when you transfer product from a cultivator into a retailer, you need to transfer it from the seed to sale system into the POS system, and those need to match, as well as the invoice. So when you buy it from the cultivation and they deliver it to the distributor or the retail shop, you need to make sure that you're getting everything that you say, because in their metric, it's going to say we transferred over all of this. And if they don't actually deliver that, your physical inventory count in your store is not going to match metric. And metric or MJ Freeway or whichever seed to sale track and trace system is in your state, that's the source of truth for the state regulators. So when the state regulators come to audit you on a monthly or quarterly basis, they're pulling a metric report and they're coming in and they're saying, hey, show me the 10 count of edibles, gummies per this metric report on your shelf. And if it was eaches and you put ounces by mistake and you've got something wrong and you haven't done that 3-way match and you're off, you are no longer in compliance. They have the autonomy to grant and revoke licenses, so they can suspend your license, they can fine you, they can provide penalties, they can either fine you once, or they can do it on a daily basis until you get it fixed. They can completely shut you down. They have the authority to do what it is that they want to do to you if you are not in compliance. So you want to make sure that your accountant understands this. They have implemented a 3-way match and that they're monitoring and tracking this. And then they're also doing inventory counts. There should be daily or weekly cycle counts to make sure that things are still matching. And if they aren't matching, there needs to be adjustments to not only your POS system, but to the state seed to sale track and trace system for any spoilage, any shrinkage, or any weight measurement issues, because we are still dealing with a plant which dries out and the weight changes a little bit. So those inventory adjustments will need to be made on a regular basis to ensure that your business stays in compliance. And here's just a slide of the state seed to sale track and trace systems. And then another thing, your accountant needs to put a complete cash control system in place. And I offer this to all of my accountants that I work with, starting with the daily cash log, register count forms, vault count forms, and SOPs, not only standard operating procedures for the accountant, but standard operating procedures that your accountant needs to give to your store manager and your store operators. Because if your accountant is not physically there and you have a cash sale and a cash payment, and you say the cash sale was $100, and then your vendor comes in and you buy some product for $60 and you pay them cash on delivery, your accountant is just going to see $40 either deposited into the bank or what have you on the count sheet. But if you aren't communicating to them, hey, this is what happened, here's the invoice related to that $60 sale, and so that they can properly track this, your numbers are not going to be correct. So it's important that your accountant has standard operating procedures to give to the store operators, so the store operators know how to properly report information to that accountant so that they can do their job. Okay, so it's important that we put all of these different things in place and everybody knows what's their responsibility. And so lastly, let's just talk about if you are looking for an accountant, here are some of the questions that you should be asking your accountant to make sure that they are qualified and they understand you, your industry, your business, and they have your best interest at heart. So do you even understand the state tax reporting requirements for my state? As I mentioned, I showed you a couple of different examples. I showed you Illinois, I showed you New York, I showed you New Mexico. So every single state is different. When you hire an accountant, no matter where they're located, I'm located in the state of Nevada, but I know the requirements for all the states that I just spoke to you about, and I can easily learn the requirements for any state that I have a client in. So it's not a requirement that your accountant is physically there, but it's a requirement that your accountant understands your state if they aren't physically there. Okay. Are you familiar with 280E conformity in my state? That's something that they need to understand. Do you understand the state's deed to sale track and trace systems and the reports to pull? That's something that a lot of accountants don't know because you have to have a cannabis license number to even get access to these systems, to even get them on the phone to ask questions, customer service. So I brought in a cannabis, a metric expert into my training, and I train all my accountants on metric so that they can see the back end, they can see what reports to pull, they can see what information is on those reports so that they can better serve their clients. So that's a question they need to understand these state seed to sale track and trace systems. And not only do they need to just be familiar, but they need to know which reports to pull and how to put controls around it, the three-way match and all those different types of things. Do you have systems in place to ensure we are able to implement strong inventory controls, including inventory intake controls, cycle counts, to ensure state compliance? Make sure you ask those questions. Can you help me create and monitor strong cash controls to protect my investment? Keywords, create and monitor, because you can put something in place. I can say, hey, here's the daily cash log, but I've had so many times where I give my client the daily cash log, but that thing is not being managed. They don't understand, no matter how much I explain it to them. Maybe the bud tender or the store manager or who's ever in charge, they just aren't financially there. They cannot grasp that this needs to balance at the end. So there still needs to be some monitoring and continuing training and education to make sure that that control is in place and operating. Do you know what needs to be in place from the accounting department when it comes to the license renewal? And are you able to provide timely reporting to help me make informed business decisions, including budgets to actual reports? So those are some of the questions. There's tons of other questions that you can ask, but this is just to get you started when you're hiring an accountant. And if you're looking for an accountant who is trained in this, I've been teaching this for 5 years now, and I have so many operators coming to me looking for an accountant that I built out. I invested in building out an entire page on my website to host all of our members. And so their information is there. You can contact them directly. You can search this database and find an accountant there. And if you are an accountant and you want to be a part of that network and learn how to work in this industry, here's how to contact me. And I actually have a free Facebook group as well. I don't have it up here on the slide, but it's NACAPPros.org/FB group. So hopefully that's easy enough to remember. I'll drop it in the chat, and I guess we can figure out how to get it to people who are on the replay, but NACAPPros.org/FB group. All right. And with that, let me know if there are any questions.
We do have a few questions, Naomi. Let me first start by saying, as undergrad, I have an accounting degree, but I would not profess at all to have any competency in that arena. I would always defer to a licensed CPA or an accountant. But as a owner of an infusing operation, this has been priceless information that you have provided today. And it is overwhelming at first, I think,
Yes,
for most of us. But it is important to let be overwhelmed, let that sink in, and then get after it. Get the information, the tools that you need so that you can be in compliance and not frustrated with regulators who come in and could interrupt your business because you're not doing things correctly. So
Right.
I want to first just start by saying thank you
Oh, you're
so
welcome.
much for such a thorough presentation. I know that we will continue as EJC to be in contact with you as a resource because this is information that will be ongoing as a need. But let's
Right.
just, I know we only have about 6 minutes left, but I wanted to touch on just a few questions. One was, do you work with operators or only accountants?
Okay, yeah. So me personally, I only take on one operator at a time.
Okay.
And I train my network of accountants. I don't have the bandwidth. Maybe I just hired my first employee, so maybe that will change in the future. But right now I can only take on one at a time. And then I would refer you to my network.
Okay, wonderful. So one of the slides that you provided was to go on your website and you can access an accountant who's gone through the training system and would be versed in all of the things that you've expressed here, and you could select them to potentially work with. That's going to be wonderful to the EJC community of licensees who might be looking for an accountant. Very, very good. Thank you for that. And the second was, how does a potential client reach you for your services? And that is the contact us. So in that instance, a potential client, you serve mostly accountants who are looking to, participate in the industry, correct? You did confirm that you work with one operator. You don't have the bandwidth to work with many operators, but you are training a team of accountants who would be able to do so. So individual who's looking to source an accountant, you already provided the resource for them to do that. And accountants who are looking to get in the industry should really serve the cannabis industry, should really tap your resources and become a part of your training. Would that be correct?
Right.
Okay.
Yes.
Wonderful. And then, so one question here, and as you emphasize, and it's so important to note, state by state, things differ tremendously, right? And so here in Illinois, there are 4 separate licenses: cultivation or craft grow, infusing, dispensary, transportation. For our infusers and our transporters, are they subjected to the same 280E,
So for infusers, so is that more like manufacturing, creating the edibles
infusers
and
are creating edibles, vapes,
okay.
And chocolates.
Yeah. So infusers, they're subject to 280E. However, there's more favorable because if you're changing the physical component of the plant, you get to write off all of the cost associated with doing so.
Okay.
So whoever the labor, the materials, the equipment, all that stuff, the utility cost, the portion of the building. So if you're paying rent, the portion of the building that you're doing this, so you want your administrative office to be as small as possible because you want to be able to write off as much rent as possible. But you get to write all that off as your cost of goods. You get to capitalize that as inventoriable cost and write that off as a cost of goods sold. However, transportation, it just depends on what's going on. So this transportation, is this delivery to the end user or is this delivery to the retail?
We hope that transportation in Illinois evolves to be delivery to the end user. Currently, it is delivery between, let's say, a cultivator to a dispensary.
Okay, so in that case,
or maybe an infuser to a dispensary.
In that case, technically, that transportation never really takes ownership. Like they don't own this product. They're just moving it from point A to point B. Correct. And so they don't have any goods. They don't have any cost of goods sold, period. So they're plant touching. So yeah, so they're offering a service, they're paying fees on that service, but since they're plant touching, technically they are subject to 280E. However, a lot of the attorneys, it just depends on how much risk you're willing to take. A lot of the cannabis tax attorneys that I've worked with, they would not take 280E taxes on those, because then you have zero write-offs, because you
Yeah.
don't have any cost of goods sold. So you can't write off your fleet. You can't write off your fuel. You can't write off that. That's an expensive business. So
Very expensive, and that's
you need
something
to
to
work.
consider. Yes.
You need to work with a good accountant and a good attorney and make sure that you understand your risk. So technically, no, you are subject to 280E and you're not supposed to write those off. But I would venture to say that I would take that risk and write off my expenses and then, fight it down the road.
Yes, very good to know. We're at time, but I must say, all of us could sit at your feet and learn more. So I want to encourage all those attending and watching the recording, because we're going to distribute the recording widely to our community, given it's the holiday. To be able to reach out to you, follow you on social media and on LinkedIn for all these wonderful resources. It really has been such an asset to have you. Such a thorough presentation, and a great way to end the year as people are looking to be operational and selling products in 2023. Very important to have your house together with respect to accounting, because your house can quickly get shut down if you are not fiscally, doing what you need to do. So thanks again, Naomi. Kelly, did you have anything? I think we're at time. So
Yeah, no, me and JT have just been texting through the whole presentation that this is so amazingly important and awesome. And just thank you for all this information. You have made me clearly understand that I am not to operate a cannabis business, because I would quickly be audited out of business. I can't even balance my checkbook right. My husband does all of that. And so this would not be a business that is for someone like me. But I think that that's also an important conversation to be had, just to understand your bandwidth and what are your strengths, and if this is a good opportunity for you or not, because it's important. And because we also work with making sure that people understand that the cannabis industry is an entire industry, and there's so many other places that you can participate and play. Understanding what those, what you're good at, what are your technical strengths, and if being super specific and technically organized is not one of your strong suits, this is something that you need to think about and just be honest about it. So you brought that to light wonderfully. But this was amazing information for folks who are going into the business, and we just appreciate you and want you to come back. And I know JT will be in contact with you and see what else we can set up to squeeze you in, and just to salute your Black girl magic, as a person in this industry doing such great things. I appreciate your time.
Thank you so
Appreciate
much.
you greatly. Thank you
Awesome.
so
Thank you.
much. Have
All
a great
right.
holiday, everyone.
Everyone have a good holiday.
And we
You
will be
too.
sharing the recording.
Okay, awesome. Sounds good.
Bye now.